Frank Napolitano just come in from the West End. How was traffic? Was it all right?
It wasn't bad, actually. I came in a little earlier this morning. I've already spent an hour at the office, so.
Have you really?
Yeah, I have.
At mortgagebrokersottawa.com. Where's your office, my friend?
Carling Avenue.
On Carling. Yeah.
Yep.
We're going to talk about something this morning that I've never heard of till I read some information you sent me. It's multi-tiered mortgages.
Right.
How does that work?
Well, basically the way it works is a bank will sit down with the customer and say, hey, if you want to, if you think that rates are good now, you could take something like, you can take your mortgage and split it into 3 different terms. Where if you had, an example is a $300,000 mortgage, they might tell you you can do $100,000 in a 1 year, and our 1-year rate is great at 2.59.
Right.
You can take $100,000, put it in a 3-year, and our 3-year rate is 2.79, and our 5-year rate is 2.99. Take $100,000, put it there, and this way you split up your mortgage.
I had no idea you could do that.
You can. And banks are becoming more aggressive at selling that.
Is that right?
There's a reason behind it.
Why are they becoming more aggressive at doing this?
Well, I think it's a good retention tool for them to keep the mortgage at that certain institution, because when your 1 year is up, and give you an example, I got a call from a customer last week, and he said, Frank, the best they're going to give me is 3.29. And I said, well, that doesn't make sense. Let's move the mortgage over. And I said, so what do you owe on the mortgage? And he started to tell me he got it last year and he got a multi-tier. I said, well, you can't just move that one section over. The mortgage is all together. So you're stuck with them unless you pay the penalty to get out of the other 2 terms.
Oh.
The only time it makes sense, I think a mortgage like that makes sense, is if you're expecting, maybe you have an investment that you're selling in a year from now, or you've got an investment property, or you're expecting an inheritance, or there's a big bonus coming in. Then it makes sense to kind of take that portion and put it in a, in a term like that allows you to pay it off. Because
you've got that money coming, you can pay off a portion of that mortgage or one of the terms?
Which is more than your allowable limit. So in other words, if you get a mortgage, typically it's 15 or 20%.
Yeah.
So if you took out a $300,000 mortgage, it's $45,000 to $60,000 that you're allowed to pay down. But if you're expecting $100,000 if you sell that investment property, then that's above what you're allowed to do. So maybe you would take a 1-year mortgage at that point.
Right.
But apart from that, with rates as low as they are today, I don't know that it makes a lot of sense to take these multi-tiered mortgages, because rates are only expected to go up. So why would you open up your mortgage to a year from now or 3 years from now to have to renew it into a higher rate?
Plus, you're putting yourself in a position where you're right, you can't escape from the bank you do this with. There's no possible way to get out of that without paying a penalty. Stupendous amounts of penalty money.
So in that case, we did the math, and they were actually better off taking the 3.29 for a 5-year than taking a 2.89 that we could have offered them, because the penalty to break the other 2 terms was way more expensive than the savings would have been on the 40 basis points. So that's the only, again, it's a good mortgage if you had, an investment coming up, or you needed to put a big chunk of change on the mortgage. Apart from that, it doesn't make a lot of sense.
Why are the banks being so aggressive? Because there's so many options out there?
Well, I think sometimes the bank thinks that they're doing the customer a favor by doing this, but in reality, there's not much of a favor when at renewal time you can't get the very best rate that's out there. They give you the best rate at the time of getting the mortgage, but then at the time of renewal, they've got you there as a customer,
right?
So they don't necessarily have to be as aggressive discounting the rate.
They're also being aggressive in other areas, though, too, right?
No,
because there's competition, there's stiff competition out there.
Absolutely. Very aggressive at attaining business and not so aggressive at retaining business. And it's disappointing, because you're kind of rewarding the new business, but I think all around businesses are like that.
Yeah.
But not so rewarding to your customers that have been with you and loyal to you.
Well, there's other options out there, and that's why we urge people to shop around and make sure they get in touch with you and your group at mortgagebrokersottawa.com, because shopping for a mortgage is just that, right?
A lot of money.
Yeah. I mean, you're dealing with the biggest investment of your life, probably.
Yep.
Frank, good to see you, my friend.
Hey, great to be back.
All right. Frank Napolitano here from mortgagebrokersottawa.com. Again, get in touch with Frank and his team and explore your options. That's what this is all about when you're buying a home. There's no question about it.